and sum up. So while the speakers are talking, I just remind everyone just to mute and keep the video off. And so I'll hand over to Faline.
Okay, great. Excuse me. Thanks, Ollie. So it might seem like a strange place to start a talk about Marx's understanding of the way that capitalism works as an economic system, but I want to start by looking at what's happened in Texas over the last few weeks. As everybody I'm sure knows, power and water outages plagued the state of Texas recently amid an unusual deep freeze that sent many families into survival mode. This didn't happen because of the Green New Deal, as many right-wing politicians, including Republican Senator Ted Cruz, have tried to claim. It happened because the power grid in Texas was handed over to a private corporation to run, and they decided not to winterize the power grid, as experts had been warning was necessary for just such an event. Not unlikely in our epoch of extreme weather events, themselves an effect of the ongoing climate crisis. As a result of the deep freeze, many people were left without power and water for days, and several people died, including a woman named Jackie Yuen, her mother, who was sheltering with her daughter after she lost power, and Jackie's three kids, Olivia 11, Edison 8, and Colette 5. And Nguyen says, we thought we were really lucky because we still had power until the early evening. When their power went out a few hours later, the family hunkered down, lit the fireplace, and played board games and card games, she said. The kids tried to teach their grandmother some card games, and the family had tired themselves out by around 9:30 p.m. Nguyen told CNN that she said basically, I tucked my kids into bed, and really the next thing I know, I'm in the hospital. A few hours later, the fireman and police officer came and said that no one else made it. The cause of the fire that killed Jackie's mother and her children has still to be determined, but the underlying cause is really the greed and anarchy engendered by capitalism as an economic system. And emblematic of that greed are surely Republican politicians like Ted Cruz, US junior senator for Texas, who made this joke just yesterday at the beginning of his speech at the CPAC, the Conservative Political Action Conference that's going on this weekend in Orlando, Florida, and at which former President Donald Trump will be speaking this afternoon. So this is how Ted Cruz started his speech. Got to say, Orlando is awesome. It's not as nice as Cancun, but it's nice. Of course, he's referring to the trip that he and his family took to Cancun, Mexico, to escape the extreme cold in Texas. He got caught out by the media, escaping the situation while his constituents were freezing and dying, and then tried to pin the blame on his daughters or to claim that he only went down to escort his family and then was coming right back to help fight the situation. As has always been the case, the wealthy and the ruling class are by and large able to escape the consequences of the anarchy and misery that are let loose by the system that they preside over, and benefit from. As Virginia said in her opening, their plan to go to Mars to escape probably climate catastrophe. And that misery for ordinary people globally has certainly increased many times over during the last year of COVID. So what I want to do in my section of the talk is to look briefly at Marx's description or his analysis of how capitalism works and for whom. And then Parry is going to look concretely at how this has played itself out in terms of the COVID crisis of the past year. During the year of COVID, output, investment, and employment in nearly all the economies of the world plummeted as lockdown, social isolation, and collapsing international trade contracted output and spending. And yet the opposite was the case for the stock and bond markets of the major economies. The US stock market indexes, along with others, ended 2020 at all-time highs. After the initial shock of the COVID pandemic and the ensuing lockdowns, when the US stock market indexes plunged by 40%, markets then made a dramatic recovery, eventually surpassing pre-pandemic levels. And I think it's clear why this happened. It was the injection of credit money into economies. The Federal Reserve and other major banks injected huge quantities of cash/credit into the banking system and even directly into corporations through the purchase of government bonds from the banks and corporate bonds, as well as through direct government-backed COVID loans to businesses. It turns out that a lot of the COVID money from government, which was supposed to mostly help small businesses, went overwhelmingly to large corporations. Much of this credit largesse wasn't used to keep staff in pay and employment or to sustain corporate operations. Instead, the loans have been used as very cheap or near zero cost borrowing to speculate in financial assets. What is called margin debt measures how much of stock market purchases have been made by borrowing. The latest margin debt level is up 7.7% month over month, and it's at a record high. Marx called financial assets, stocks, and bonds fictitious capital. Engels first coined this term in his early economic work, and then Marx developed it further in Capital Volume 3, where he defined it as the accumulated claims or legal titles to future earnings in capitalist production. In other words, claims on real capital, that is, capital that's actually invested in physical means of production and workers, or money capital, cash funds being held. A company raises funds for investment by issuing stocks and or bonds. The owners of the shares or bonds then have a claim on the future earnings of the company. There is a secondary market for these claims, that is, buying and selling these existing shares or bonds, a market for the circulation of these property rights. Stocks and bonds do not function as real capital. They are merely a claim on future profits. So the capital value of such paper is, Marx called it, wholly illusory. The paper serves as title of ownership, which represents this capital. This is how Marx put it. While the stocks of railways, mines, navigation companies, and the like represent actual capital, namely the capital invested and functioning in such enterprises, or the amount of money advanced by the stockholders for the purpose of being used as capital in such enterprises, this capital does not exist twice. Once as the capital value of titles of ownership, or stocks, on the one hand, and on the other hand, as the actual capital invested or to be invested in those enterprises. According to Marx, the capital exists only in the latter form, while the stock or share is merely a title of ownership to a corresponding portion of the surplus value to be realized by it. So investors or speculators in financial markets buy and sell these financial assets, driving prices up and down. If cash or liquidity is flush, share and bond prices can rocket, while banks and financial institutions invent ever new so-called financial instruments to invest in. And again, this is how Marx describes it. With the development of interest-bearing capital and the credit system, all capital seems to double itself and sometimes treble itself by the various modes in which the same capital, or perhaps even the same claim on a debt, appears in different forms in different hands. The greater portion of this money capital is purely fictitious. The central banks become key drivers of any financial asset boom. Again, as Marx put it some 150 years ago, inasmuch as the bank issues notes that are not backed by the metal reserve in its vaults, it creates tokens of value that are not only means of circulation, but also forms of additional, even if fictitious, capital for it to the nominal value of these fiduciary notes. And this extra capital yields it an extra profit. So the creation or printing of money by central banks provides the liquidity for speculation in the stock and bond markets that we've seen in the last year of COVID. Marx reckoned that what drives stock market prices is the difference between interest rates and the overall rate of profit. As profitability actually fell in 2020, what kept stock market prices rising was the very low level of long-term interest rates, and this was deliberately fostered by central banks like the Federal Reserve around the world. What's called quantitative easing, that's buying financial assets with credit injections, has doubled and tripled in this year of COVID. So the gap between returns on investing in the stock market and the cost of borrowing has been maintained. But here's the problem. The share price of a company eventually has to bear some relation to the profits made or the profits likely to be made over a period of time. Investors measure the value of a company by the share price divided by annual profits. If you add up all the shares that are issued by a company and multiply it by the share price, you get what's called the market capitalization of the company. In other words, what the market thinks that the company is worth. This market cap can be 10, 20, 30, or even more times annual earnings. If a company's market cap is 20 times earnings and you bought its shares, you can assume that you'd have to wait 20 years to reap the profits and dividends to match the price of your investment. As long-term interest rates have fallen, the market cap price of corporate shares relative to profits or earnings has risen. Currently, it's at levels that were only surpassed in 1929 and during the dot-com boom of 2000. So if profits drive the share prices of companies, then we would expect that when the rate of profit in capitalism rises or falls, so would stock prices. To measure that, we can get a sort of average price of all the company shares on a stock market by using a basket of share prices from a range of companies and then indexing it. And that gives us a stock market index. So does the stock market price index move up and down with the rate of profit under capitalism? The answer is that it does over the longer term, namely over the length of the profit cycle, but that can be as long as 15 to 20 years. In the shorter term, the stock market cycle doesn't necessarily coincide with the profit cycle. Indeed, financial markets can reach extreme price levels relative to the actual underlying profits that are being generated in an economy. The most popular way of gauging how far the stock market is out of line or out of sync with the real economy and profits in productive investment is by measuring the market capitalization of companies against the accumulated real assets that companies have. This measure is called Tobin's Q, not that that's that important. It basically takes the market capitalization of the companies in the stock market, say of the top 500 companies in what is called Standard and Poor's 500 index, and divides that by the replacement value of tangible assets accumulated by those companies. So the replacement value is the price that companies would have to pay to replace all the tangible assets that they own, things like plant, equipment, software, etc. For the last 100 years or so, the average mean Q ratio is about 0.78. The Q ratio high was at a peak of the tech bubble in 2000. So it was about 174% above the historic average. The lows were in the slumps of 1921, 1932, and 1982, and they were about 62% below average. But in this year of COVID, Tobin's Q has reached 233% above the average, which is a new record. Another useful measure of the value of the stock market relative to the real economy is what's called the Buffett Index. It's named after famed billionaire financial investor Warren Buffett, who uses this index as his guide. It measures the money value of all stocks and shares against the current national output in the real economy, the GDP or the gross domestic product. Again, this shows that in the year of COVID, the stock market has reached a record high relative to the real economy. Indeed, financial speculators remain in total euphoria as they continue to expect central banks to plow yet more loans and cash into the banks and institutions, along with a likely subsiding of the COVID pandemic in 2021 as vaccinations are distributed. The belief is that corporate earnings will recover sharply to justify the current record highs in stock prices. Citi Research has what's called a euphoria/panic index that combines a bunch of market mood indicators. Since 1987, the market has typically topped out when this index approached the euphoria line. The two exceptions were in the dot-com boom that we talked about at the beginning of the 2000s, when it spent about 3 years in the euphoric zone, and right now. This euphoria index complements the views of the world's most powerful investment bank, Goldman Sachs. Their experts forecast another 15% rise in the US stock market in 2021. But as Marx explained, eventually investment in financial assets has to come into line with earnings in the real economy. If you look at it, in the year of COVID, profits in most corporations plunged by 25 to 30%. Goldman's and other investor speculators seem convinced that profits will bounce back this year to make sure that the price of fictitious capital doesn't turn out to be fictitious. But that seems unlikely. COVID-19 is not yet over, and the vaccination distribution will take well into this year to reach levels of necessary so-called herd immunity, and that assumes the vaccines will also be able to deal with the new COVID variants. Moreover, if you look at the stock market boom of 2020, it was really confined to a very small number of companies, and those were, not surprisingly, Facebook, Alphabet, Amazon, Apple, Microsoft, plus Netflix. So they contributed to most of that stock market boom, which means that the rest of the S&P's 500 actually contributed only to about 4% of that increase. Most companies lost money in 2020, and there's a swath of businesses, mostly outside the top 500, but not entirely, which are in deep trouble. Earnings are low or negative, and even with the cost of borrowing near zero, these zombie companies are not earning enough to cover even the interest on existing and new loans. These financially challenged zombies constitute about 20% of the companies in most economies. Even before the pandemic, the zombie companies were contributing to a significant slowdown in corporate investment levels. With so many companies in trouble, there's little prospect of a huge jump back in investment and earnings this year. Central banks will go on providing yet more liquidity or cash for banks and corporations to speculate in financial markets. So fictitious capital will continue to expand. After all, as Engels first said, speculating in financial markets is a major counteracting or countervailing factor in the tendency for the rate of profit to fall under capitalism. And I'm talking here about the real economy. But all good things must come to an end. In fact, I was just reading an article in The Guardian this morning that said the end of February, that is right now, global stock markets are actually deep in the red once again, as fears of higher inflation are prompting a sell-off in government bonds and are spreading anxiety across the financial markets. So probably in the second half of 2021, governments will attempt to rein in their fiscal spending, and central banks will try and slow the pace of their injections, cash injections. Then the extreme levels of stock and bond prices relative to earnings and tangible capital are likely to reverse, sort of like a yo-yo. What happens with a yo-yo when the string is pulled back to the reality of being fixed to a holder, which in this case is real, sorry, just taking some water there, is real capital. The ups and downs of the stock market can actually hide the fact of where profit really comes from in capitalism. As Marx described in Capital, the creation of value or surplus value comes from only one source, and that is human labor. At some point, the high-blown speculation of greedy investors comes bumping to the ground because in the end, there is a fundamental relationship between real, actual production, human labor, and the rate of profit for the capitalists. Marx and Engels famously ended the Communist Manifesto with these words: "Workers of the world, unite. You have nothing to lose but your chains." They saw that workers collectively had the power to stop capitalism in its tracks, even though they were writing at sort of the beginnings of industrial capitalism. Because workers have the power to stop the flow of profit to the capitalists by withholding their labor power. And I think we have seen this power, albeit very sporadically, throughout the last year in wildcat strikes by essential workers in the most difficult of conditions and, if you like, in the belly of the beast, that is in the United States, where COVID has now claimed over 500,000 lives, which represents about 20% of global deaths from COVID. We saw this power briefly when workers at meatpacking plants refused to go to their deaths for profit, when Amazon workers, in fact, globally, stood up against the greed of Jeff Bezos, who Virginia mentioned in her intro. He's increased his profits over $70 billion over the last year of COVID. When teachers stood up and refused to go back into unsafe situations so that the economy could recover. In other words, so that the workers who create the boss's profits would once again begin to create that wealth. Marx argued that capitalism creates its own gravediggers in the creation of a class that has everything to gain from ending a system that multiplies human misery, as it has certainly done this past year. But the end of capitalism as an economic system was by no means a given, according to Marx. It requires human intervention. A return to normal on capitalism terms, if that's what we're looking at, will mean the further deepening of the economic, political, and ecological crises that were unfolding before the pandemic began. So I think it's up to those of us who have nothing to gain from the continuation of these crises. That is the vast majority of society, the vast majority of the human population. It's up to us to organize for the struggles that are inevitably going to come. So I'll end there and pass it over to Parry.
Yep, thank you, Faline. I just hand it over to Parry now.
Thank you. Okay. Whenever crisis hits under capitalism, time and time again, the 1% of the social economic system become more wealthy and further their monopolies upon our lives, while the mass majority, who actually create value through labor, as Faline mentioned in her talk, face the largest burden, sacrificing their health, lives, and families in the process. According to Business Insider, between mid-March and mid-April, billionaire wealth in the US increased by 282 billion or 9.5%. Bezos, however, has benefited at an unprecedented amount of an increase of 25 billion since January of the pandemic. This is all while frontline workers who manufacture, distribute, and stock our supply chains, and those who tend and care for the most vulnerable, and all those who work on the front lines, both in the States and in many cities in Canada, have to work 2 jobs just to make enough to survive due to stagnating wages. So you can see the stark difference between those who create value and those who sit on the value and wait for it to accumulate to cash out. Although New Zealand and a few countries in Asia were able to effectively stop spread of COVID-19, not only was Canada too late to effectively stop the spread, but every step down the economic ladder, segments of the population receives less and less support. In BC, while homeowners receive mortgage halting periods by most banks, those who rent, which is the mass majority in BC, had to organize a coalition and continually petition the NDP government all through a pandemic for rent relief. Although the government did assist those who had been laid off due to the pandemic, while in the States, and while in the Western US, construction is not considered an essential service and was halted. But in BC, companies used every means in the book to declare that they were in some way or fashion essential due to their position in assisting in construction. As a result, none of us here can be surprised in the surge of cases due to close working conditions and poor hygienic practices in most warehouse and manufacturing facilities. Now, surprising stat here, the job I just quit a few months ago, top management has just removed all water tanks from the facility and is threatened to lock all washrooms in favor of 2 portable washrooms per 200 people in the parking lot due to workers not agreeing to a new contract, all while a pandemic is ravaging on. So you can see not only is top management and not only the company that I was in, but most companies in BC from the people I talked to, not really following in line with how to protect workers in terms of hygiene, in terms of distancing, all these kind of things. Profit is really their number one concern, and nothing else is going to come close. In the US, reported from the Kaiser Family Foundation, essential workers made up nearly 70% of the labor force. Of that amount, 25 million adults work minimum wage jobs. What makes the states different, however, is when workers lose their jobs or if they choose not to work due to the increased risk of death while being exposed to the public during a pandemic, they often also lose their health insurance as well. Therefore, in order to receive their insurance, they ironically need to stay working in unsafe conditions. Although local governments have put up billboards and radio ads declaring frontline workers as heroes, most, if not all, organized groups of frontline workers have come out and demanded requests that the government do more to stop the spread, to increase wages during this period, and a state hazard pay for essential workers, which are all things that will not only save lives, but will create a better working environment for people who are working during this time. and rather than the government's routine level of lip service to essential workers and those working at minimum wage levels. Now, currently, when we look at available COVID vaccines, we have 3 being administered most popularly: BioNTech, Pfizer, Moderna, and the Oxford vaccines. All 3 took just over 9 months to develop, rather than the years or decades that R&D usually takes. Under capitalist lore, there's always a billionaire to save the day just in time. If you look at popular comics, we have Batman, who's usually there to save society from the Joker. In reality, however, the vaccine turnaround time was only possible due to years of funding by the public sector and university or government labs publishing data and papers. Not only is this true of the COVID vaccine, but for almost all useful and life-changing inventions and developments, such as what we're using right now to communicate, the internet. Although development of the vaccine was rolled out at a superhuman speed, deployment seems to have hindered in its effectiveness, even as wealthy nations making up 13% of the world's population have bought up more than 51% of the available vaccine dose candidates. Therefore, 61% of the world's population will not have a vaccine until at least 2022. By the end of 2022, sorry. In a grim statistic in hoarding, all of Moderna's and 90% of BioNTech Pfizer's dosages have been bought up by wealthy nations. A simple approach here may have been to depatent the vaccines to be able to produce generic mass quantities in countries like Germany, China, and especially India, who specialize in the medical manufacturing field and who are experts in creating or manufacturing pills, vaccines, items like this that have a generic formula to them that can be mass produced. However, taking this course of action would significantly decrease the amount of profit that medical companies can squeeze out of each vaccine and would give way to competitors to corner the market. Not only for the COVID-19 vaccine, but for vaccines in the future, right? Each company would have a smaller amount of share in the market. It took mass cooperation and public funded research for the approved vaccines to be accepted, but logistics of deployment are a capitalist nightmare of hoarding and poor planning. The global South, who have time and time again been subject to Western intervention when industry needs cheap resources, likely lack the infrastructure for vaccine deployment of this nature. The Oxford vaccine needs to be stored at regular fridge temperature, which is reasonable, while the Moderna vaccine needs to be stored at -20 degrees Celsius. And the BioNTech Pfizer vaccine needs to be stored at -70 degrees Celsius. So you take these temperatures that have to be refrigerated and you try to distribute them with the least amount of movement possible, like stop and go, in areas where infrastructure is not as suitable for this process. Now, furthermore, all the vaccines that I just talked about need 2 doses at a specific time frame to be effective. If they're not at a specific time frame, they're not guaranteed to be effective. In contrast, AstraZeneca, the company manufacturing the Oxford vaccine, has stated it will be made not for profit for the developing world. And while it is cheaper and needs only to be stored at fridge temperature, they can only reach about 18% of the world's population by the current manufacturing capability. So to sum this up, while the uses of public funding resources are allowing a few companies to retain patents and profiting on life-saving and essential vaccines during a pandemic, The world is at an unknown position of when and how it may be safe for them to visit and care for their families and friends again and somewhat lead a normal life. So at the end of this, what this basically means is what Faline had talked about in her segment, that companies are unable to create an effective, they've created an effective vaccine, but not available to deploy it due to the capitalistic nature of our socioeconomic economy. And if we are successful in the near run of eradicating COVID, then it's up to the workers of the world, it's up to us to ensure that we do not go back to what we had before, but we go on to something greater. I think in the International Socialists, at least, this is what we try to do. And it's only with the working class that we can effectively move our bosses and move our politicians to be able to do this by, in effect, socialism. So that concludes my section, and I'll hand it back to Ollie.
Yeah, thank you, Parry.